Hello guys and welcome back to our YouTube channel.
In this video, we're going to be breaking down some pairs going into next week. Ryan's going to be talking about Euro CHF and I'm going to be breaking down AUD-JPY.
But before we get into that, make sure you like, comment and subscribe and turn on post notifications so you don't miss any content.
So let's get straight into it.
Three, two, one. Hello guys. 3, 2, 1. Hello guys and welcome back. We're going to start with Eurchf here, starting on the weekly chart and working our way up using top-down analysis. So obviously on the weekly chart we can see here where price made its Elliott wave 1, 2, 3, 4, 5, finished the cycle of this downtrend. You can see the outer trend line here has been broken and retested, then we impulsed away, and we also had the inner trend line here which was respected, impulsed away, retested it and then continue up. So as you can see now, we're now in bullish market structure where price is making higher highs, higher lows, and now we've recently made a higher high in the market, and we're just going to continue in this bullish trend going to the upside. So let's just look at a bit of market structure on the lower time frames here and understand why this is kind of happening. So jump down on the daily. What can we see? So we can see where price, when price was retesting this trend line, it actually continued, and this can find it happening quite often. But it also formed a falling wedge as well. Back to it in, boom. You can see where price was correcting to the downside, squeezing. And once that happened, we had a bearish correction and then a bullish impulsive move to the upside. So obviously after impulsive moves, we normally have some sort of consolidation, a correction. And in this instance, we formed a range. And as you can see, price was moving sideways. Once price finished consolidating and it gained enough orders, enough liquidity, it then boom, pushed straight to the upside. And we made a high in the market, giving us an impulsive move to the upside. Now, if we draw in from swing high to swing low, we can start to see potential areas in the market where price needs to pull back to. As price is currently in a descending channel, it still needs time to develop, and it needs a bit more long in the oven, is what me and Nat used to say, where it just needs to correct a bit more because it's not ready yet. So as you can see here, price is in a descending channel. We've got a 1, 2, 3, 4 touches at the moment of these trend lines. We're looking for potential, if I can grab a potential push back up to here, retest this trend line again. Once again, enticing people to buy in the market, think the market's going to break. So we're going to get a third touch here, and then boom, we're going to come back down and tap into this 50% type of region and get that third touch of this descending channel lower trend line. From there, we can then see a push, pull back, and then continuation to the upside and targeting obviously higher levels of, if I drop back on the higher time frame, it would be the 1.48. As you can see previously in history, it's made a double top here. It's a nice key resistance area in the market. Also, why do you think we're going to pull back to this level? As you can see here, price formed this evening star, and price should just absolutely continued from here, but it didn't. There's lots of buyers that stepped into the market at this level. Therefore, price still hasn't really came back and retested this level either. We've just fallen short of it a few times. So like I said, it potentially needs to come back and tap into this type of area. Tap into this area where buyer stepped in previously, tap into the 50% and give us that third touch of this descending channel. Once that happens, we can clearly see that price is going to have a nice big push to the upside. So yeah, this is Eurchf going into next week. Currently had an impulse followed by a correction, and then wait for that continuation to the upside and just be patient, sitting on our hands and letting price come to us and then making our decision. So boom, yeah, Eurchf going into next week.
Right guys, so I'm going to be talking about AUD-JPY going into next week, doing some technical analysis and looking at the overall direction of the market. So starting on the monthly time frame, getting an idea of who's in control of this market on a higher time frame perspective. Well, we can see that price has previously reached a level of support in the market down here, formed a massive wick projection, and ever since we've just been forming bullish market structure. So now it's all about understanding where price is in the market, because of course we're very bullish at the moment if we drop down to the weekly and the daily. However, this isn't just going to go on forever and ever. Eventually we're going to reach some kind of resistance, and there's going to be some decision making going on whether buyers or sellers are going to step into the market next, which is what we actually have. Looking at the monthly candles as well, you can see we were forming bullish engulfing candles until the last 2 previous months. We've seen one big wick projection to the upside, and then the following month where we failed to actually engulf it. So once we drop down to the lower time frames, you'll be able to see that we're really at a place in the market where it's a battle between buyers and sellers to see whether we are going to continue bullish or whether sellers are going to step in and drive the market down. Looking at market structure, I'll drop down to the weekly. You can see that we have broken weekly bearish market structure. We're downtrending here, and then ever since we made this rejection of support, we saw an impulsive move, and then we formed bullish market structure, almost looking like an inverse head and shoulders, with this side over here being the left shoulder, and over here I've got this correction in place, this being the right shoulder. Now we've come up to a level in the market, and you can see that price has been consolidating, forming these doji candles for a while now. If I just zoom in, you can see all this market structure is very messy, and the reason being is because we've actually reached a level in the market, a quite important level in the market through here, where price has previously been using it as support and resistance. Over here you can see it's been used as resistance, it's broken through, used it as support, we've broken through, and you can see all these wick projections in the market where sellers have stepped in and has been using it as resistance again, and the market has turned bearish. So we've reached this level again. So what's happened here is buyers who stepped into the market down here or wherever in the market they've stepped in, they've always been targeting this level here. So whether they stepped in down there or even previously, they're targeting this level through here at around 84, so in between 84 and 85 psychological level, they've been targeting this level. So what's happened here is people are taking their profits. So all the buying momentum is slowing down because there's less buyers in the market, and there's obviously now the scales are equaling basically, because buyers and sellers, the battle between them, there was more buyers in the market, and now it's slowly turning to potentially see sellers step into the market. Let's drop down to the daily now to look at market structure. So let me just delete this zone I just had in. So price has obviously been making higher highs and higher lows. We've come up here, we made a higher high, we pulled back, we've made a higher low, pushed up again, we made a higher high, pulled back down, made a higher low. But then what did we see price do? We failed to form a new higher high in the market. So this right here is the first kind of initial kind of evidence that potentially the trend is changing. We're not obviously going to look to sell here because the market is still uptrending on the higher time frames. This is just an indication to potentially stop looking for buy positions, not to potentially sell, but just to prevent us from taking any buy positions, because now it's all about waiting to see who takes control of this market. So this right here is potentially looking like a head and shoulders pattern, with this here being the left shoulder, this up here being the head, and we've now potentially made the right shoulder. However, from here, we didn't actually see price push to the downside and break structure here. We're still uptrending, we're still forming higher lows. However, again, we then fell once more time to make a higher high. So all price is doing now, we're actually seeing an equal battle between buyers and sellers, because we're not making higher highs, we're not making higher lows, because we come back down here and we're seeing a rejection. All price is doing now is actually bouncing in between a range. So there's equal buyers and there's equal sellers within the market. If I just draw a support zone through here, there is actually equal buyers and equal sellers in this market, and we need to wait and allow the market to do its thing so then we can trade accordingly. Obviously, at the moment, as it stands, it's more so favoring the buy positions because of the higher time frames. We could potentially see price move higher, but if we do get a break, there's nothing stopping us from taking sell positions. So what we're pretty much going to be waiting for next week is for price to either give evidence that sellers are taking control, and we wait for a break below this level, and we look for a pullback to make a lower high, and then we look to continue to the downside, potentially into some of these lower levels here. Or we look to see if buyers can take control, and we allow buyers to push price higher, pull back to make a higher low, and then we continue to potentially the top of this channel again, continuing with that. Now, one thing to keep in mind, as you can see here, price has many times tried, let's zoom in a bit, to break above this level. You can see here, this is just a false breakout. If I drop down to the 4 hour, you'll be able to see this. So this right here, potentially, you can see this was like an impulsive move, we corrected, but then we impulsed, but all that was a false breakout. So what we need to be sure of is we're not just buying on the breakout. We want to see a clear break to the upside. On the daily time frame, we want to see a strong daily candle close, because we can see that previously the daily has failed to break above and we've left the wick. So if the price does break above or below, we want to see a nice daily candle close, and then we look for the pullbacks. So yeah, overall on AUD/JPY, it's an equal bias. We're sitting on our hands, we're waiting, and we're allowing price to do its thing and to tell us whether buyers or sellers are taking control of the market. So yeah, that's AUD/JPY broken down into next week.
Thanks for watching, guys. Really hope you took something away from it.
If you want to join the AR community and receive some help and guidance along your forex journey, click the links in the description below.
Until next time.